Market builds on gains to trade at day's high. Mid-cap index gallops 2.5% over 5 stocks advancing to every one declining. IT, FMCG are the only losing sectors. DGTR recommends imposition of 12.5% safeguard duty on imports of flat steel products for 200 days to ward off dumping from countries like China. Ferrous stocks rally 2 to 7%. Other metal shares like Hindustan Zinc and Madani also shine with the sentiment drop-off. Blue Star and PG Electroplast tell CNBC-TV18 that the availability of compressors could become an issue if AC demand grows more than 30% this summer season due to non-tariff barriers on non-component imports. The companies also await a government incentive scheme that can boost adoption of a more energy-efficient 5-star rated ACs. Asian markets see cautious trade as Bank of Japan leaves interest rates unchanged in the face of tariff uncertainties. All eyes on US Fed as it is set to announce its rate decision tonight. No change in rates expected, but commentary on potential weakening of the US growth and rising inflation expectation keenly awaited. After a 9-month mission, NASA astronauts Anita Williams and Butch Wilmore safely returned to Earth. The SpaceX crew capsules made a successful splashdown early this morning, bringing a 9-month ordeal to an end. Hello, good afternoon. You've tuned into Business Lunch coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala and thank you so much for tuning in as always. A good day coming in for the markets and a good afternoon as well. The Nifty is managing to hold on to 22,900 levels as of now. Almost near the day's highest point is what the Nifty is trading at. Just a few minutes ago, it came off the day's highest point. But yes, Nifty trading at the day's near the day's highest point. Mid and small cap, let's pull that up. Broader market is seeing a clear outperformance coming in second consecutive day of outperformance from the broader end of the market. So Nifty mid cap day's highest point 2.5% gain, small cap 2.1% gain as of now. Banks, let's pull that up, and Nifty Bank is holding on to gains of almost 1% as well in today's trading session. And you can see HDFC Bank is among the top pullers for the market and the top supporter. Other than that, big boy Reliance is managing to do quite well in trade. 21 points in terms of contribution coming in for the Nifty 50, the support on that front. What's not doing well? Look at the IT names, Infosys, TCS, HCL Tech, all of them are clearly among the drags coming in. And that is why when you look at it in terms of a sector, Nifty IT is the top sectoral loser today. With that, Nifty FMCG is also down and out in trade and trading on the red side. A few names that in the last hour have seen a bit of a jump up coming in. So let's look at that. We have Econ International that's buzzing in trade. A bit of a spike on that front that we're seeing. We have Shree Cements that also seen a bit of a jump up, as well as Suven Pharma, among some of the names on the broader side of the market that have been managing to do well in today's trading session. A sharp jump up from the day's lowest point. As of now, most of them are trading at the day's highest point. But yes, that are some of the stocks that we're looking out for in the broader end of the market. But let's focus on the important story for today. We have the DGTR that has recommended the imposition of a provisional safeguard duty on flat steel products. Nigel is joining in with us to explain us what it means for the steel companies. What would be the benefit on this front as well? Nigel?
DGTR has recommended that close to around 12% safeguard duty on all imports that are coming in on HRC. This is important, but keep in mind this needs to be notified by the Finance Ministry as well, which most sell-side analysts don't believe it's going to be a bit of a challenge on that front. So for the time being, it's the DGTR that's proposed it. And in fact, we'll be waiting for the Finance Ministry to go ahead and approve it. Few points to note out here. One is the industry, they were rallying for around 20 to around 25% safeguard duty. But the realistic assumption was that you'll get closer around 10 to around 15%. In anticipation of this news, you've seen that steel prices have moved up by around 2,500 rupees per ton, or around 5% in the last 1 month or so. Now, with this 12% safeguard duty, they have some headroom to go ahead and increase prices further. Keep in mind that domestic flat steel prices are already at a premium in comparison to imported steel, so there could be some headroom out there. What's positive, though, is that this price hike that they've taken, that sticks, and that directly flows down to the EBITDA per ton. As it is, we know that coking coal costs have come down, so it'll be a dual benefit for them. Q3 FY25, in all likelihood, the EBITDA per ton for all these steel majors, they have bottomed out, and things will look up from here on, which is positive. Philip Capital, they have come out with the note and they say, in terms of pecking order, SAIL is the one that they believe is the most benefited, followed by JSW Steel and Tata Steel. There'll be a rub-off effect, though, on the entire value chain. So good news coming in for the steel companies, but keep in mind, they've been outperforming and anticipating this piece of news to come in there.
Absolutely, Nigel. Thank you so much for that. Now, to understand the impact furthermore of the safeguard duty on steel companies, we spoke to Manish Sarda of Sarda Group, as well as we got views coming in from Parthiv, who is the lead analyst of metal and mining at Anand Rathi Institutional Equities. Listen in to what they had to say.
Frankly speaking, this DGTR 12% move is to protect the local steel industry, our domestic steel industry. Mostly the duty is been recommended on HR and CR and flat products, coils and plates. Overall, it will not directly impact us, but the sentiment in the steel industry will be good. You know, the steel industry is just asking that we need to be given a level playing field, or either, you know, we can have a certain amount of duty protection so that there is a level playing field which is there for the steel industry, for the domestic steel industry to actually be competitive at a global level as well. Basically, if you look at the raw material prices in India, especially coking coal, you know, we don't have ample of coking coal, and coking coal is a big cost for all the blast furnace route producers of steel.
There has been reduction in the coal cost. There has been your iron ore is holding steady, and with this increase in realization, say by next maybe 1 or 2 quarters, you can straight away expect a good 10% or maybe better than that kind of a EBITDA improvement across the ferrous sector.
And let's move on now. Bajaj and Allianz have terminated the 24-year alliance, and now we are picking up from news reports that suggest that Allianz Group is looking for a new form of alliance, and that could be with Jio Financial Services. Remember, yesterday, Sanjeev Bajaj told us that Allianz will be released from the non-compete clause once the first tranche of the transaction is completed. Listen in.
Once the first tranche of the shares are bought by Bajaj, post all the naturally regulatory approval, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they're free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussions, the negotiations have been such that it's created a win-win on both sides.
And on that note, we're going to slip into a very short break here. But as we slip into the break, here's a programming note for our viewers. CNBC-TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. Scan the QR code now and submit your entry to the SME Champions Awards Season 2. Welcome back to Business Lunch on CNBC TV18. Let's move on, and investors will be watching out for the Federal Reserve's decision, which is due later today. The central bank is widely expected to keep the interest rates unchanged as global macro uncertainties loom there. Now, CNBC's Steve Leisman is joining in with us to give us more details on this front.
We're going to talk here about how respondents think about the two biggest parts of the Trump administration's policies, and they are giving poor marks to those two most visible parts, which are obviously the tariffs and DOGE, and this has an effect on the outlook for Fed policy. Tariff policy is almost uniformly viewed by our 32 respondents as bad for inflation, bad for growth, and bad for jobs. In fact, 88% say it's bad for growth and looks to be part of the reason for a downgrade in the GDP outlook and an upgrade in the recession probabilities. One of the administration's claims is that tariffs will bring back manufacturing to the U.S. Respondents are skeptical. 37% do see a potential increase in domestic manufacturing, but 22% see no change. And in fact, 34% say there could be a decline. John Riding, chief economic advisor at Breen Capital, writes in, tariffs are a tax hike, plain and simple, that at the macroeconomic level will boost prices and depress growth. These increases are pushing the public's long-term inflation expectations sharply higher, which poses a dilemma for the Fed if the economy turns down. The Department of Government Efficiency also seen as negative for growth and employment by a strong majority, but 75% think it will have a deflationary impact. We don't know if that offsets the inflationary impact from tariffs. Bottom line is that for now, forecasters are struggling to price in the upside from the president's policies, even while he says it's coming. The result, they have raised their growth outlook and they raised their inflation outlook as well, and see somewhat greater chance of a recession. And as we said, looking for two hikes this year, two rate cuts this year, but that is on the line with that summary of economic projections tomorrow from the Fed.
And on the same lines, we spoke to Johan Achua, the Managing Director, Head of Emerging Market Economics and Chief Asia Economist at Citi, on Trump's trade tariff expectations and its impact on Fed's decision. Listen in.
Going into April 2nd onwards, I think we're going to have the more structural framework of tariffs. Aside from targeted tariffs, Europe hasn't really had the big brunt of that, and I think that is still coming. We still have a number of Asian countries that could also be relatively vulnerable. So again, China also is not out of the woods. You know, it has 20% off the bat, but there's still a lot of number of issues that may be raised in China. In the short term, we're not really feeling the full brunt. But again, because this trade policy uncertainty combined with other forms of policy uncertainty, especially in the US related to kind of federal spending cuts, that really can create a bit of a growth headwind, and we're seeing this already in expectation of a pretty sharp slowdown in the U.S. So when there's a little bit of a front loading, a building up of inventory, the worry there is that if growth is underlying demand is slowing down, we get the reversal of that, kind of the payback effect, which means kind of growth headwinds could become could worsen. And I think overwhelmingly people are expecting the Fed will be on hold. Despite the inflationary fears, I have to say, I mean, we have seen some gains on disinflation. So I do think that at the margin, we're expecting coming into this FOMC is that the dot plots, there could be a slight dovish tilt because it's the growth shock that's become a lot more volatile. So we are expecting that they might signal a 75 basis points cut instead of a 50 basis points cut for 2025.
Now, moving on, and in some global economic policy updates, the Bank of Japan held its benchmark interest rates unchanged at 0.5% in a widely expected move. U.S. tariffs are heavily clouding the judgment of as Japanese policymakers are yet to gauge how American protectionist trade policies might affect the Japanese exports and especially on the economy. Now, following the rate decision, the Japanese yen moved marginally, trading at 149.46 against the US dollar. So that's the update that you have coming in on the economic policy front. But talking about some more in terms from the Germany side, now economic policy changes trickle in from Europe as well, where you're seeing Germany's parliament has voted to overhaul the country's constitutional debt brake and paving the way for a historic fiscal package to boost defense as well as investment spending by hundreds of billions of dollars. Now, CNBC's Netta Weisbach is joining in with us to give us more details on this one.
Everything hinges actually on coalition talks, what that government will actually make out of that gigantic investment volume, especially when it comes to the infrastructure bill. But having said that, yesterday it was an historic vote, as you were pointing out. Never before have we seen such a sea change in fiscal policy in the country here. And perhaps we listen in of what the two masterminds, in a way, the head of the CDU and the SPD, had to say about it.
This decision that we are taking today on defense readiness, in a comprehensive sense for our country, can therefore be nothing less than the first major step towards a new European defense community. A defense community that also includes countries that are not members of the European Union, but which are very much interested in building this common European defense together with us, such as countries like Great Britain and Norway. This is precisely where we stand today with the decision we want to take.
Germany has a leadership role to play here, and I think we should be prepared to fulfill this leadership responsibility. This amendment to the Basic Law is the right thing to do today. It's important and sends a clear signal. We will do everything we can to maintain peace in Europe.
Okay, on that note, we're going to slip into a very short break. When we return from the break, we'll get you the updates of the NASA astronauts that returned home earlier today. Stay tuned in. Welcome back to Business Lunch on CNBC-TV18. Now let's move on to some global update. An update coming in from Gaza, where the ceasefire between Israel and Hamas has been broken. Israel strikes on Gaza targets and that has killed over 400 people right now, with the government blaming Hamas for not keeping its promises. Watch this next report by NBC's Matt Bradley, who is here to give us more details on this.
War has returned to Gaza, since Israeli missiles pummeling what they say are Hamas targets, including, the IDF says, killing the head of the Hamas government there. The Hamas-run Gazan Ministry of Health said the death toll is above 400, most of them women and children. They bombed our camps over the heads of the displaced people, this man said. They bombed the tents over the heads of sleeping people. Before the ceasefire ended, Hamas had released nearly 36 hostages in exchange for about 2,000 Palestinian prisoners. President Trump had demanded all the hostages be released, but negotiations had stalled. The U.S. and Israel blaming Hamas for rejecting all proposals from Trump's envoy.
Hamas refused offer after offer to release our hostages.
Why was this done now?
We have indications, and we've seen Hamas try and rearm and regroup.
But for the family of American Idan Alexander, kidnapped by Hamas on October 7th, new fighting carries real risks. Do you worry that this military action could put your son at greater danger?
Any military action will put remaining hostages in danger. No question about it. That's why our hope really that it will be limited.
A hope shared by both hostage families and Gazan civilians.
Okay, and President Trump and his Russian counterpart, Vladimir Putin, dialed each other yesterday to negotiate a ceasefire deal with Ukraine. NBC's Richard Engel is joining in with us and has more details on this 2-hour conversation.
Exactly 1 week after Russian President Putin rejected President Trump's 30-day ceasefire, arguing Russia couldn't slow down its offensive, Putin changed his position, slightly, agreeing to a partial ceasefire. In a nearly 2-hour call with President Trump, both the White House and the Kremlin say Putin agreed to suspend attacks on Ukraine's energy sector and infrastructure for 30 days. President Trump calling it a very good and productive call, with an understanding that we will be working quickly to have a complete ceasefire. The Kremlin naming several conditions to move further, including stopping foreign military and intelligence aid to Ukraine. Ukraine's President Zelensky, who had already agreed to Trump's ceasefire unconditionally, said he accepted Russia's proposal, but Ukraine would continue to welcome foreign military assistance. Outside of Kharkiv, these Ukrainian volunteers are following Russian troops with drones.
Central commander is looking for the targets.
In a nearby safe house, the unit commander showed me an operation as it unfolded. A Russian mortar position being attacked by Ukrainian artillery.
Is this positive from your perspective? Does this open the door for more discussions?
Absolutely
a broader
not.
Ceasefire?
Absolutely not. Russia is pretending that they are peaceful. They are not. They are not. Their aim is to destroy Ukraine totally.
Let's move on. Our NASA astronauts Butch Wilmore and Sunita Williams made a successful return to Earth early this morning after an extended space mission. The astronauts journeyed back to Earth inside a SpaceX Dragon capsule, which made a successful splashdown off the coast of Florida. After splashdown, our recovery teams swiftly conducted routine medical checks on the crew before assisting them out of the capsule. NASA astronaut Nick Hague was the first to exit the spacecraft, followed by cosmonaut Alexander Grubnov. Sunita Williams was the third to come through the hatch, and shortly after, Wilma was helped out of the capsule. The crew will now undergo NASA's 45-day post-mission rehabilitation program designed to help astronauts recover from the physical effects of the space flight. Okay, and that's all the time we have on this edition of Business Lunch on CNBC TV 18. Thank you so much for tuning in. Stay tuned in for Midcap Radar coming up next.